Broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to our discussion on cash flow reporting in Design Manager. My name is Brad, and I'll be hosting the demonstration today. If you have questions during the webinar, feel free to enter them into the questions pane on your GoToWebinar panel. If the question is outside of the scope of today's discussion, please email them to support@designmanager.com. And lastly, if you missed a portion of the webinar or want to review any of our past discussions, go to our YouTube channel at Design Manager Inc., Design Manager INC. And here you can see a complete listing of all sorts of topics, including our quick start videos, short helpful tutorials, along with our comprehensive webinars, which we categorize into our project management courses, our accounting courses, and all of our weekly webinars, such as today's presentation. Okay. Today we'll be discussing the reports in Design Manager specifically created to assist in monitoring cash flow into the company at a variety of levels. Design Manager uses accrual accounting, which is recommended for interior designers in the General Accepted Accounting Principles, GAAP for short. Accrual accounting does not rely on cash transactions to determine the fiscal standing of the company. Rather, it uses the creation of client invoices for revenue versus vendor invoices recorded as cost of goods sold to determine income, along with expenses, etc. That being said, it's still critical to review the movement of funds in and out of the company to avoid ever getting to a point where available cash is at a dangerously low level. So let's go ahead and get started. The first report I'd like to review is the Project Cash Flow Report. That's under our Project Reports, Project Management, and about 2/3 of the way down, almost towards the bottom, we can see Project Order Cash Flow. Remember, you can always attach a report that you find useful to your favorites just by clicking the Add to Favorite button with the desired report highlighted, just like that. That way, you don't have to hunt through all of our hundreds of reports to find the one you're looking for. Okay. The project order cash flow is designed to show the funds coming in from the client in the form of deposits and retainers, payments on client invoices, and then going out via payments on vendor deposits and vendor invoices. As most firms generally only work with a few projects at any given time, monitoring the cash flow at the project level often directly correlates to the overall company cash flow. Personally, I find the report to be one of the most intuitive cash flow reports available to us. Let's go ahead and run the report for our Carter's Pennington Home project. And here we go. And we can see that the report's going to be broken up into 4 sections, and I'll go through each of them in turn. Let's make it a little larger so we can see everything available to us. Oops. There we go. The first section shows all the funds received from the client at the beginning of the project or within phases of the project in the form of deposits and retainers. And we can see I have 3 deposits for each of my 3 proposals, and I have a single retainer. Let's review the columns and how they apply to our client retainers and deposits section. Well, the invoice PO number is not going to be needed in this case. The proposal number will be listed for all of our deposits on proposals. Retainer, of course, would have nothing there. The type, very simple. It's either going to be DEP for a deposit on a proposal or RET for our retainer. The date, that's the date entered on the new cash receipt window. The description, this is the extremely helpful yet optional transaction description. Now, Design Manager will default the transaction description in certain areas. So you can see deposit on proposal number 2, for example. But I try to make them as specific as possible, particularly when something is changing or out of the ordinary. It just makes it quite useful when I'm trying to review information that I may have entered in quite some time ago. And you can see some custom descriptions that I have changed there. The vendor column has no bearing in the client deposits and retainers, of course. The transaction number, that's the unique cash receipt transaction number for the deposit or the retainer. The check number, that's the optional check number from the client as entered on the new cash receipt now. And it can really be anything entered into the check number field on that window. It could be an ACH number, it could be a credit card reference number, it could be cash, etc. And at all of the balance or the fiscal columns, the only one of any bearing is our deposit column. That's going to show the total amount received, not the total amount available for the deposit or the retainer. So that's the actual amount received from the client for each of those various transactions. And at the bottom of the section, we can see the total deposits, retainers received. Again, that is the amount received, not available. That's all the money that we've received to presumably begin ordering from our vendor. Our next section is our client invoice and payments section. And this is going to show all the monies received as payments on existing invoices for our client, along with the application of the deposit or retainers on those invoices from the section above. Let's take an example of some of our transactions here. So our first transaction is an invoice, our invoice 10,000. We have the amount, the net invoice, and the current running balance. Right beneath that, we can see the payment on that invoice, which brings that balance due down to 0. Another invoice we can see, invoice 10,001 and 10,002, they also use the deposits that we've recorded in the section above. So we not only see the invoice itself, we can see the application of the deposit and further the payments on those invoices themselves. Basically, any fiscal transactions applying to that invoice in general. And it still has our running balance due to represent the future cash flow coming in as well. Let's go through the columns here and see how they apply to each of our transactions. Now in the invoice purchase order number, we will see the invoice number listed for our payment transactions. The invoice number itself will be in the transaction number column, as we'll see momentarily. The proposal number will be listed if the user, upon creating the invoice, entered in the proposal number on the new invoice window and it appeared on the invoice document itself. The type, again, fairly self-explanatory, INV for client invoice, PMT for payment upon that invoice. The date is either the invoice date from the new invoice window or the payment date on the new cash receipt window. Description, again, anything that we entered on our new cash receipt window or on the invoice window upon generation itself. Vendor, again, is not applicable in this section. The transaction number. It's the unique invoice or cash receipt transaction number. Now, note here, you can have transaction numbers for other types that are the same. For example, we have an invoice of 10,000 and a deposit transaction with a transaction number of 10,000. That is not uncommon at all and does not represent a transaction number being used repeatedly. Each type of fiscal transaction has its own transaction number. Next, we have our check number. Again, as I described in the deposits and retainers section, that's the check number from the client that can optionally be entered on the new cash receipt window. And now we have much more activity in our fiscal columns. First, we have the gross invoice. This is the invoice total, including sales tax, if applicable, prior to any reduction in the balance due from an applied deposit and or retainer. Next is that deposit column, which represents the application of that deposit. And you can see in this example, at least, that the deposits match up exactly as they were entered in as deposits on proposals themselves. So the deposit column in this section is the application of any retainer or deposit, reducing the total balance of the invoice, which leads us to the net invoice column. That's the original balance due of the invoice, less any deposits or retainers being applied prior to any payments being received. And then that gets us to our payment column. This is going to be any amount of client invoice payment transactions on that invoice itself. So looking back at our original invoice, we can see our payment transaction conveniently references the invoice itself in both the invoice number matching the invoice number, and in our description column as well. And the running balance due shows just that. It shows all of the invoices with their payments and represents the total accounts receivable balance for the project. And in turn, that represents actual positive future cash flow. So we can see our first invoice is paid in full. Our second invoice has a $5,000 payment. Our next invoice then further increases that balance, and so on. And at the end of our client invoices and payments transactions, we have totals for all of those columns. And now we can see our deposit retainer available. This is going to match reports such as the Open Client Deposit Report or the Deposit Analysis Report. And it's going to represent all of the funds that we still have available, which presumably will be applied against future invoices. And with that in mind, they shouldn't be considered positive cash flow or future cash flow. It's funds we have received in from the client to be applied against future invoices. And if we jump back briefly to our client deposit and retainers section, we can see our total amount of $23,285 and change, how much we've used, leaving us with the $12,400 even of deposit available in the future. Great, so those are all the funds coming in from the client. Now let's turn that coin over to the other side, and we'll begin discussing some of our funds going out for the project as we have to pay our vendors, of course. So the third section is going to be showing funds sent to the vendor in the form of vendor deposits. So the vendor will begin processing order if necessary. So let's take a brief look at some examples here. Well, our first line here is a deposit transaction, of course, on our purchase order of $1,250. And right beneath that is the check that was written for that purchase order and that deposit. So it reduces the running balance due on our vendor deposits. Compare that to a deposit a bit farther down, we can see we have a deposit on one of our purchase orders for Cravit. Now, in this case, we can see that the deposit was paid via credit card. In those cases, the deposit and payment will be the same, and there will be no running balance in those cases where we actually paid the vendor with a credit card. Payments made to vendors with a credit card will never have an effect on the cash flow of the project itself. They will have an effect on the company level, of course, as eventually we're going to pay the credit card company, however, but in the case of us monitoring cash coming in and out of the project, there is no effect of that credit card payment itself, at least in the interior of this report. We'll touch upon that again briefly in a moment. Now let's quickly look at some of the columns we have here for a little bit greater detail. Now, yes, we can see our purchase order number for the deposit itself. The type, either deposit or check. Check represents any form of payment, not a credit card, associated with the vendor deposit. It could be a computer printed check from Design Manager, a hand check, wire transfer, ACH, etc. The date, either the date of the deposit or the date of the check payment. Any transaction description would be listed, of course, such as initial deposit. The vendor code associated with the purchase order that corresponds with the deposit and the check itself. The transaction number of the deposit payable or the check payment or the other form of payment. The check number from our checking account. These are our computer printed checks from Design Manager. We could also see any type of automatically generated reference number for wire transfer, etc. And whether or not it's been paid via credit card. CC will always represent a payment of the deposit via credit card. The gross invoice column will be left blank when we're looking at our vendor deposit information, but our deposit, of course, will be filled in. That's going to be the amount of the vendor deposit itself. Net invoice has no bearing on this particular section, but the payment does. This represents the payment of either the check or some sort of cash payment or the credit card payment, as we saw with our Cravit example. And just like we saw with our client invoices, our running balance due reflects basically the total amount of deposit that we have yet to pay the vendors themselves. So we can see we have payments for almost all of our various vendor deposits, except for our most recent one, which we just recently entered of $785. So I've entered the deposit, but I've yet to create a check payment or otherwise indicate payment. So that represents the total amount that I still owe of vendor deposits themselves. Let's jump to our last section, which is going to be our vendor invoice and payments section. This is going to show us all the funds that we've had to send the vendor in the form of vendor invoices for final payments of a good or service. What we can see here, I have a vendor invoice for America's Mattress, where I can see that I have the invoice itself, the deposit that was applied to it, the total amount of the invoice, and how much I have due on that invoice. In other words, the unpaid balance on that invoice. So both my America's Mattress and my Baker vendors have unpaid balances. Now, our invoice for Bungalow 5, you can see I have remitted payment upon that, and that brings our running balance due back to the original. Beneath that, all of our other transactions were paid via credit card, so they're going to have no effect on our running balance due. So all of the information that we want about our vendor invoices is listed very nicely for us here. And finally, let's run through our columns as well on this section. So now we have the vendor invoice number that I entered. In certain cases, if I didn't have a vendor number available, I just put it in a description of the transaction itself. Proposal number has no bearing here. Our types, are they going to be INV for vendor invoice or check for any type of payment from our banking institution? The date represents the vendor invoice date or the payment date. Our transaction description. The vendor associated with the purchase. The unique transaction number for either the vendor invoice itself or the check payment. The check number, either our computer printed check number, our hand check number, again, any type of information we entered there, or as in the section above, CC, if I've indicated that I've made that vendor invoice purchase on my credit card. Now, the gross invoice amount. This is the total amount of the invoice received from the vendor prior to any application of a deposit. Next would be the deposit that was associated with that particular invoice. So if the total bill was $2,500 from America's Mattress, I sent them a deposit of $1,250, which does correspond right back to our vendor deposit section. That reduces the total invoice in our net invoice column. The net invoice is going to be the amount of the vendor invoice prior to any payments. Then any check or cash payment will be listed in the payment column, reducing the running balance due as we saw, along with any of our credit card payments as well. Beneath all of that, we have two totals for us. First, we have our vendor deposit available. This is the total amount of deposits that can still be applied for future invoices, basically funds we've already sent out. So in the future, we're going to owe less on the final bill for the vendors who've already paid a portion already. So we can see our $785 that we sent most recently in our vendor deposit area is still available for use on a future vendor invoice. And lastly, we have our opened accounts payable. How much of both our vendor invoices and vendor deposits do we have left unpaid? And we can see it's the total of our first two vendor invoices along with the $785 we still have to pay on our vendor deposit. That's the total amount that we still owe to all of our vendors, which of course would effectively reduce our cash flow. And beneath all of this, we have our miscellaneous project-related expenses. This is going to display any project-related expenses to fully capture all of our cash flow. And we can see we have one FedEx charge that we still need to pay as well. Again, effectively reducing our future cash flow. Now, let's go back to the beginning because I purposely overlooked one area called our project cash flow summary. This allows you to quickly show the net cash movement for the project. Sure, we may have tons of money in the bank, and I hope we do, But we still don't want one project dominating the cash flow if funds are not coming in, but expenditures are coming out. So the cash flow summary quickly allows you to see how a particular project is affecting the overall company cash flow. And all of this information corresponds to the information in the body of the report, which is why I wanted to go through that information first. So we can see $10,000 in retainers. Yes, we do. 13,285 in deposits coming in. Yep, we have that as well. The sum of all of that equals the 2385 that we saw in our first section. Payments on invoices of 8,250, and that is true as well. Then we have our vendor deposits paid, reducing our cash flow, vendor invoices paid, yet payments on a credit card are also shown separately. Again, on the body of the report, that's an immediate payment having no net effect of cash flow for the project. But we separate those credit card payments out to indicate quite readily that yes, we have paid the vendor, but we still have to pay the credit card authority as well. And we want that to reduce our conceptual cash balance as well. So our project cash flow summary very quickly allows you to discern how a particular project is really affecting the company's overall cash flow. Okay, project cash flow analysis. A tremendous amount of information on that report, and then you can summate it by using the project cash flow summary at the top, and it really does help you identify how a project is affecting your cash flow. So now let's move from that very straightforward project level report to stretch our mind a little bit, and let's examine a company level cash flow statement. This is used to convert the net income for the company or into changes in the company's cash position. The cash flow statement is one of the classic financial reports, along with other reports such as your income statement or profit and loss, P&L statement, and your balance sheet. Because the income statement is prepared under the accrual basis of accounting, as I mentioned before, the revenues reported may not actually have been collected in the form of payment from the client. Similarly, the purchase and expenses reported on the income statement might not have been paid to the appropriate vendors. Now, you could review your balance sheet and the changes in that balance sheet to determine these amounts and sort of manually construct your own cash flow, but the cash flow statement already has integrated all of that information for you. And as a result, savvy business people and accounting professionals often utilize this important financial document, but it does warrant some detailed analysis to see how all of that information is displayed to us and what it truly means. So let's go ahead and take a look at our cash flow statement, which is under our general ledger reports, financial statements, cash flow statements, and you can easily access that by going to your accounting tab, financial statements, which gets you right to the same spot. There's our cash flow statement, and I'll add that to our favorites as well. Let's go ahead and print this. And the first thing to ask you is, for what period do you want to analyze your cash flow? We have to analyze cash flow over a time frame. It can't just be instantaneous. It must be over a certain period of time. So as it's the beginning of 2019, why don't we go ahead and look at our cash flow as of all of last year? And here we go. Now, let's again make this a bit larger. Perfect. The very first thing the report does is it starts with the net income over that time frame. Now that net income should match my net income on my income statement for the end of 2018. And to verify that, just take a peek at our yearly income statement for 2018. And again, yep, that should say $10,098.93, which matches what's being displayed on the report perfectly. So now the cash flow statement is going to convert that amount into a reflective change in cash based upon other or the type of fiscal activity within our time frame. If all the bills we received from our vendors were received and paid within the period, as well as all of the invoices to our clients being generated and paid within the same time frame, The net income would ultimately match the increase in cash once we remove any company expenses and investments, etc. But that's simply never the case, which is why this report becomes so useful once we can understand it. Here is an important rule of thumb with this report. Numbers in parentheses are generally, let's call it, bad or a negative effect on cash, but they might be good on the balance sheet. Conversely, positive numbers are conceptually good or positive flow for cash, but might be bad on the balance sheet or have a negative ramification on the balance sheet. So let's go look through each of our lines here and examine what it really means. First, we're going to start with our accounts receivable under the adjustments to reconcile net income to cash. This is our changing in our working capital in each of the various activities here. So if we look first at accounts receivable, over the time frame last year, our accounts receivable actually went up, or it increased between the beginning of the year and the end of the year. The positive net income is due to us invoicing our clients. But as these invoices are yet unpaid, we need to remove them as we convert to our cash flow. Yes, we invoice the client, but we haven't received payment upon those. In other words, our accounts receivable increased. Again, that's desirable on the balance sheet, as the accounts receivable represents an increase or in a company asset. But since they are unpaid, they obviously have a negative effect on cash. Next, work in process. Our work in process also increased by $23.90. This represents purchases that we've made for the client, but have not yet invoiced the client for those purchases. So this amount must also reduce our effective cash, as we've spent money, but we've not yet received repayment. If we did invoice the goods and they were still unpaid, they would move over into accounts receivable. This is another financial aspect that's desirable on the balance sheet, as work in process represents an increase, or at least a reallocation in a company asset, effectively that we own the merchandise until the client is invoiced. Basically, we're just simply reallocating our cash into tangible goods. Vendor deposits is next. Our vendor deposit balance actually went down over that time frame. We have less funds as prepaid with our vendors over that period. Now, I can't say for certain where the cash is, but it's no longer with the vendor holding it as a deposit. Presumably, it's been used against new vendor invoices, reducing the overall bill, but regardless, those funds are no longer available to us, quote unquote, out on the street with our vendors. Accounts payable. These are bills that I've received, but I've not yet paid, and this actually increased over the time frame. Well, this represents a benefit to cash flow, as we're receiving goods or services without paying for them. That's good for cash flow, not so good for the balance sheet, as our liabilities are increasing, and eventually our vendors are going to get angry with us for not paying them. Client deposits is next. Client deposits also increased over that time frame to a fairly sizable degree. That's money we're receiving for future goods and services that we've not yet provided, which makes sense. That's great for cash flow. We now have funds available to the company from outside sources. In other words, our clients are giving us funds. Now, these funds should be allocated to future invoices, of course, but conceptually, it strengthens our cash flow. Finally, sales tax collected. This also increased over that time frame. Here, the client will be giving us funds for that sales tax to eventually remit to our sales tax authority. But currently, it strengthens our cash position as we get the funds from the client to cover the sales tax, but we haven't yet paid the tax authority. Basically, we're taking in the money from the client, and until we pay the tax authority themselves, that, of course, is increasing our cash flow. So net cash from operating activities. If we start with our net income, reduce it by accounts receivable, work in process, and vendor deposits, and increase it by our unpaid accounts payable, all of the client deposits we've taken in, and the sales tax collected, we now come up with a value of $27,895.70. But we're not done there. we still have to examine some other company-wide financial activities. So the next section is going to be cash flows from investing activities. First, undeposited funds. These are checks or cash that we have received from our clients, but not yet recorded, as we have not actually physically taken them or deposited them with our banking institution. So really, that needs to reduce our cash position. Yes, we've received it, but it's not with the bank available for our other investing or accounting activities. So that's going to, any undeposited funds will reduce our cash flow. Similarly, we've had an increase in equipment. So I went out and bought some equipment for the company, and that basically represents a transfer of liquid funds, i.e. cash, into an equipment asset. And the same would hold true if I did any purchasing of stock or CDs or real estate, which would reduce our cash flow. Again, it's fantastic for the balance sheet as I'm reallocating those assets, but I am reducing cash to do so. So then the sum of those investing activities is 5945.15, which we're going to remove from our cash flow. And finally, we have any other cash flow from financing activities, taxes, depreciation, etc. Most commonly, credit card. Our American Express balance went up in that time frame. Well, that's great for cash position. We've made purchases from our vendors, but we actually haven't paid for anything. We used our credit card to compensate the vendor, but we have not yet returned our funds to American Express for the ability to use their credit card for those purchases. So we've gotten our goods and services paid for our vendors without actually having to put out any cash for ourselves. So that would make sense that that would be a positive effect on cash flow. And as another example, we have common stock. The owner or principal or principals invested another $10,000 into the company out of their own personal funds. So that increase in common stock, of course, would represent a positive cash flow for us as well. So the sum of those two positive effects is $10,636 and change. So then if we take our net cash from operating activities, reduce our reduction from our undeposited funds and equipment purchase, and put back in our financing activities, we come with a net increase of cash of $32,586.83. And as a reference for that, we can see the net effect of the net balance of all of our cash at the beginning of the fiscal period and our ending cash at the end of our selected period. And you can see that matches the 32,586.83 exactly. And if we cross-reference that with our account inquiry, we only have a singular cash account, so it makes this analysis a bit easier. But if we look at our checking account from the beginning of the year to the end of the year, we can see we started with 752335, ended with 40,110.18, which again is exactly what we see here. So our total increase in cash is the 32,000 and change. So that's taking our net income and looking at all the financial activity over that time frame within Design Manager and converting it to a cash flow. So why is this exercise helpful? A few reasons. By comparing the cash from the operating activities to the company's net income, it provides a few descriptions of strength of the company. If the cash from operating activities is consistently greater than the net income, the company's net income or earnings are said to be of a high quality. If the cash from operating activities is less than net income, that's a red flag is going to be raised to why the reported net income is not being turned into cash. Net income is fantastic, but if it's not returned back as cash at some point, it becomes a little bit undesirable. Another concept, some investors believe that cash is king. The cash flow statement identifies the cash is flowing in and out of the company. If the company is consistently generating more cash than it's using, the company's strength increases. So more employees can be added, fixed assets or even another company can be purchased. The owners or investors can take bigger draws, etc. So cash obviously has a huge effect upon the strength of the company. And this is a fantastic report to see how your net income is being converted into cash over a selected period. Cash flow statement, a bit of a conceptual, harder report to focus upon, but if you take it step by step, it really does make sense over time. Okay. Next report I want to focus on is the project order status report. Now, this report shows an amazing amount of detail regarding your specifications in your project, including order tracking information, general status benchmarks, etc. But it can also be used to answer the how much cash is mine question for each item and even the project as a whole. That report is found under our project management folder, in our order tracking folder, project order status. And there it is. Now here you can see there's a lot more options available for us on this report. First, we have all of our ranges. We have a range for client, project, location within the project, and even a proposal range within the project. Remember, ranges are used to only narrow the scope of the report. If you want to see everything for a project or client or what have you, just leave those ranges blank. You don't have to enter in information. We'll focus just on one of our projects. The status selection. Now that can be quite helpful for our cash analysis. We might want to see what's our cash position on items that are only ordered or that items that have been invoiced or completed, etc. We'll leave it set for all. Show full description, fairly self-explanatory, whether or not to include to show the entire description of the item and the components. Exclude completed items. In general, you might want to leave that set to yes, because you want to view the order status information only for items that are still within the design cycle. But we want to review the cash flow on all of our items, regardless if they've been completed or not. So we're going to set that to no. In progress items only. In this case, we're going to leave that set to no as well. This option says whether or not to only show items that are ordered from the vendor but not invoiced to the client, sort of in the midst of the design cycle there. But we want to see how much we've sent to our vendors and how much we've collected from the client. So we want to, again, see all of our items. So we're going to leave that set to no. The new version, we need that set to yes. This is the only version of the report that has this cash flow aspect to it. Additional information, that can optionally show status information for the specifications, which is quite useful. And it does show some additional accounting information, so we're going to leave it to display for a little bit greater insight, though it does make the report a bit longer. Project summary, we'll get to that in a moment. Okay, let's see what this report offers us. Make that a bit larger. And again, you can see a lot of information immediately displayed to us. And we'll simply focus on our first item in our example. So here we can see the item reference number, the description of the item, the proposal number of the item. Then we can see the total cost, the total price to the client, any tax to the client, and the total estimated amount to the client themselves. Next to that, we can see any deposit that we've requested from the client, what's been invoiced to the client so far, if anything, payments made to the client, from the client. That's going to include both deposits on proposals and payments on invoices. Next, we can show paid to vendor. This is going to include actual checks or other banking payments made and credit card payments only. So it has to be true payments to the vendors themselves. And finally, it goes into our O vendor. The O vendor is extremely sophisticated. What this will show, if no vendor invoice has been recorded, in other words, we haven't received the final bill from the vendor, and yet a deposit is required and none yet sent, it'll show the deposit amount. That's going to be the next thing we owe. If we have sent the deposit, we're going to show our cost less that deposit. Finally, if a vendor invoice has been recorded, it's going to show the total amount of the cost less any payments coming on there. So it's really going to show the next future cost or the total we owe the vendor along the design process. Now, let's see where some of this information comes from. Obviously, the cost, price, and tax comes right from our specifications. Requested amount, again, we're looking for about 50% of that, not including sales tax. Our payments, $369. Notice in our status area, we could see deposit received of $369, matching up perfectly. Yes, we did invoice the client, which is why we're showing the invoice column, and we can see the deposit was used, how much the item was after the deposit is applied, and the current amount due on that item. For our payments, we can see in our component area how much has been paid. Again, this is going to be including any deposits or vendor invoices sent. So we can see right here, final payment on the upholstery itself and the freight for our total of our $580. So all that information is completely unified throughout the software, and we can see it listed nicely for us. So what does all of this mean? Well, our final column is our net effect of our cash flow. And that's going to be all of the payments that have come through, less what has been paid to the vendor, and less what we owe the vendor. So right now, we're quote unquote in the red. We're $211 down because we still have that balance on the item of $405.90. So we've only received just the deposit upon it. When that final cash comes back in, we have nothing left to owe the vendor, so all that's going to flip around our cash flow presence. And if we go down to the end of the report, all that is totaled for us. So we can see, looking at all the totals, if we look at our estimated price, tax, and total estimated amount, well, that's $11,1231. We've only invoiced $2,200 and change of that. So we've already paid out the vendor quite a bit, and we owe the vendors quite a bit. We have a lot of invoicing left to do and a lot of payments to still come in. So we can imagine that our cash flow will change dramatically over time. And further, we even show any retainers we've recorded as well. Now, retainers aren't applied to a particular item, so we show them at the bottom in the total region of the project themselves. So we have an exact idea of all the funds coming in. So as time goes on, all of our invoicing gets done, all of our payments come in, and at the completion of the project, we can look at this report and see on a per item basis exactly what that item did for our cash flow for the project and hence for the company as a whole. And if all we want to do is focus on the cash flow or various financial activities of the project, we can run it using the project summary. And that will show us one line per project exactly how much our cost, price to the client, tax to the client would be, what's been invoiced, how much funds have come in, what we've paid, what we owe, and our net cash flow for each of the projects. Again, as time continues to go forward, hopefully our payments from the client increases more than our payments to the vendor increases as well. So in this case, we're utilizing a traditional order tracking or status report also as a cash flow indication as well. Great. Project order status report constantly has tons of uses to it. Let's take a look at another report. This is our project cash allocation report. And this also requires a bit of examination to discern all of its valuable information. That report is also listed under our project management, but right in the body of that folder, project cash allocation. And again, here we have the ability to narrow it for a particular project, a location within the project. Might want to focus on a particular sales category. Basically, how much did we, what's our cash flow on furniture against all projects, for an example, or even for a particular proposal within a project. We have formats of the report available to you. Items within a project sorted by sales category, items sorted by location, or a project summary here as well. Let's focus on the location format. Next, we have an option, items with no cash received. Well, now by default, we only want to run the report for items that we have funds received. This keeps the report showing the most relevant information, as we're not letting any items that have no cash associated with them undesirably lengthen the report. But let's show all of them in our example, and then show full description. Again, do we want to see the entire description of the item on there? Let's run this back to our familiar Carter's Pennington Home project, and let's see what's available for us here. Many columns, so let's increase our size and run through what's being displayed for us here as well. Let's look at our bed as an example in the master bedroom. Of course, we have the reference number and the description. In our estimated area, we have the cost, the price to the client, and the sales tax. All of that can easily be cross-referenced right from your specifications. Let's take a look at our Carter's project. Item 1, right in our pricing tab. How much is our cost? What's the price to the client? And the sales tax, $5,200, $6,720, and $336, which matches our amounts perfectly. Next, the cash received area. Any deposits we've received from the client, any payments from the client on invoices, and the sum of both of them in the total column. Again, you can jump over to your status tab and see that information. We have our received deposit of $33.60, a payment of $1,694 and change. So our payments to date on that California King bed is $5,054.06. Yep, sure is, right on our cash received. The third area is our current allocation area. This is going to be the actual amounts of what may be reducing our cash flow on the item to date. First, the paid to vendor. This is going to be any payments on deposits or vendor invoices. So if we look at our PO window, for example, I know item 1 has components both on purchase order 1 and purchase order 2, and you can see that I sent 2 deposits, both for $1,250. And the sum of that is $2,500 exactly. The sales tax, we sort of have to conceptually set aside this amount, because eventually we're going to have to remit this amount to the tax authority. Now this item's been invoiced in full, so this is the true sales tax we owe. The total, which is basically the paid to vendor and the sales tax summated for you. The profit is going to be the total cash received less the current allocation total. Finally, we have our estimated future allocation. This is going to be what we imagine the current allocation will be at the end of the design cycle for the good or service. So we know we're going to eventually, if everything remains as expected, our total paid to vendor should be $5,200, as that was our original purchase order cost. We know what our sales tax will be, and then we add those together. The cash is going to be the discrepancy between the cash we've received and the total future allocation, which you can see here. Again, we're at a bit of a negative value there. Why? Well, we still have quite a bit of money to receive on our invoice payments. We've invoiced $6,720 plus the sales tax, and yet have only received $5,044.06. So there's still well over $1,100 to receive in payments there. So our cash position should be flipping dramatically. Another handy viewpoint of this report, just like we saw with our project order status, there's a project summary version here as well. So I might not need to see the item detail, but simply want to review my cash allocation on a per project basis. So now we're summating each project one line each. So I can look at all of my active projects and see what their current cash position is for our company. And again, yes, we're probably sending out lots of payments to the vendors right now, but we certainly will expect some invoice payments coming in over time. Project cash allocation, very important report, lots of information there, fairly intuitive as well, and highly underutilized. So I recommend that one as well. And with that, we just went through several reports in Design Manager that we've specifically created to monitor cash flow on an item, project, and even a company-wide basis as a whole. I recommend spending some time with each of them to see which are the most helpful for yourself in reviewing your company's cash flow and which one you find the most intuitive for whatever need you're looking for. And with that, I thank you all for joining our discussion today, and I hope you attend another of our free webinars in the near future. Take care and have a great day.